Good morning, everybody. I'm Ed Parco here with Francisco Rubalcava Jr. How you doing, sir?
Good. How are you?
Good. And we're Real Estate Jerky. What's going on? Talked about this earlier in the week, but I thought it would be important to say it again that another homeowner insurance carrier is leaving the state of California, Hartford, which I didn't even know they did home insurance, to be honest with you. I know they did other insurances. Hartford joined State Farm and Allstate to leave the state as of February 1st, 2024. So that was as of yesterday or today. Today's February 1st.
State Farm and Allstate. That's big.
Well, I ran into this just the other day. I had a reverse mortgage I'm doing, and it's in the Parkway, which most people would say condo complexes. Well, when they approached me about doing a reverse mortgage, well, if it's a condo, we have to see if FHA, if it's approved, the complex is approved, or you can do individual spot for just one unit. So when I looked at that for condos under FHA, I said it was denied. So that's a sign for me that it's not a condo complex. That's one of the signs. I was like, hey, this isn't a condo complex. This is something other. And we have one of them here in Modesto. It's people think they're condos and they're PUDs, which is a planned unit development, which means you own the building, you own your house or whatever it looks like a townhouse, but it's not always townhouse. These are single stories. It's people think they're condos, but they're not. Planned unit development just means there's an HOA to cover the common areas. A condo means that you own the airspace inside of the place that you have, so you can get away with what's called a renter policy that just covers your couches and your furniture, your clothes, that kind of stuff, jewelry. Well, in Ceres and Parkway, those are not condos. So if you know anybody who thinks it's a condo, it's paid off, and they have a condo policy, there's a problem. If it burns down, you're just getting new clothes and furniture. You're not getting the place rebuilt. Yeah. I ran into that with my reverse mortgage. I found out it was a PUD, which I didn't know an issue with the policy yet. So we reached out to the HOA about the master plan. They're like, hey, we don't cover his property because it's not a condo, it's a PUD. And so his policy we looked at was just $35 a month, which is like a renter's policy. So we had to go find him new insurance. He had State Farm. So we thought, hey, just go to State Farm, whatever. And they're like, oh, we're not issuing new policies.
So with the ones that are leaving the state, they still service it if it's there, right?
Yes. If you don't make any changes to it.
Right.
If you got to make a change to it, go get new insurance somewhere else. And that's the problem here. They went from being a renter policy to a full policy, which they're not writing. So I reached out to some people I knew who is a brokerage. Can I say their name? Top Flight Insurance.
They're great. I use them.
Yeah. I know Asher he's in my Rotary. I reached out to them, and within a few hours we had the policy, and I'm like, oh, you guys might want to pay this so that it's active. We don't have the money. So we put it in the refinance or the reverse mortgage. Moral of the story is, make sure if you're in a condo, you're truly in a condo. And the only way that you would not know what you are is if you don't owe anything on the loan. That's because if there's a loan on it, us lenders are like, well, look at it. No, this is wrong. Get this fixed, right? But if you don't have that, you don't have somebody helping you. So when they went to he inherited the house, and at that time he went and get insurance. They just wrote it, oh, it's a condo, because that's what it says here and here and here, which was not accurate. So yes, that's what happens when you don't have the right insurance on your property. Make sure you reach out to the right people.
Yeah, I think it's crazy with how many insurance agencies are leaving too. Like, I wonder where pricing of everything's going to end up, because people are taking advantage of it. You know what I'm saying? Like
they're going to the fair plan. This, according to Insurance Information Institute, 1.265 million California homes were at risk for extreme wildfires in 2022. That's 400,000 more homes than any other state. Well, first of all, California is one of the largest states, and I think we have 25 to 30% of all mortgages are done in California. So we have 40 some million people here. So wouldn't you assume that more properties would have that issue here in California?
Right. Yeah, I think it's just the way I just think overall it's the way that also maybe the legal system is in California,
What's about the fires? Has nothing to do with the legal right now. It has to do with the fires. And we had some major fires because they don't allow us to thin the forest. They don't fix the water issue where to store more water, so we have more water to use and keep everything green. Everything dies and catches fire. And I say the reason the state of California wants to keep this is my political hat right now, is if they don't have these drastic emergencies, they can't hit the federal government for more money.
I think it's like, well, San Diego's like flooded right now too, right?
Oh, but that happened in the late 80s when I was down there.
Yeah.
We had major rains, and you could the pictures you saw with it flying down the hills and everything. I remember seeing that in Oceanside when I was there. It was the same thing in Vista, because it's different down there. You're on hills and stuff, right? Unlike here, we're flat, so we don't see that. It just stands there.
Yeah, because I have an agent that I was actually working on a deal with, and she told me that she lives out in San Diego, and they're like in a hotel right now. It's pretty bad. But
there's no place for the water to go, except back out to the ocean, and it gets backed up. So
yeah, and I think it's it's like you're saying. I mean, I think there's like a little bit more of those natural disasters, I guess, that are occurring over here. But it's crazy because, I mean, fire insurance, like we talk about all the time, like in Sonora and stuff, right? Like that's the biggest challenge trying to go over there, is that the fire insurance is just so expensive.
Right. But it's not just there. San Diego, Oceanside, San Marcos, Vista, back up to stuff. There's issues there. They could have fire issues there. Rancho Santa Fe. That's the really expensive place down by Del Mar. If you don't know, that's where all the people with real good a lot of money live, and actors and actresses and stuff like that, and singers. Anyway, they back up to stuff that can burn. Anywhere that can back up to fire that can, that has stuff that can burn, I forget what the hills, and a lot of these houses are up on a hill, and they look out the back. There's nothing down there but brush and stuff like that. That's a problem. That could be an issue. They actually said CoreLogic shows that percentage of homes built in California, very high fire hazard zones, has declined from 5.5% to 3.5% over the past 15 years. My statement is, but building in the moderate has nearly doubled since 2008. My issue is it has nothing to do with less people building in those zones, but just less building. Right. We just haven't built the houses. So to say that it went down just because people are not building in those areas because of it, I don't see that. I just think that we have not built enough homes, no matter where it is in California.
Yeah. I think, I actually saw a tiny home for sale in Modesto for like 95 grand. Yeah. I'll try to find the listing. I'll see if I can send it to you. But yeah, that was pretty interesting. I feel
tiny home, like it was actually affixed to foundation, or is it still on the trailer?
No, it was like a tiny home fixed on a foundation, if I'm not mistaken. So we're starting to see approvals.
Is that an ADU? Here. You mean like an ADU?
No, like literally just a tiny home on a piece of land.
Oh, wow.
Yeah, which is, I didn't think that we would see that happen. I at least over here, because I think it was like, if I'm not mistaken, like, I'll have to look it up. It was like somewhere downtown,
right? But if it's not 400 square feet or greater, it's definitely not going to get a loan on it.
Well, that's what I was thinking.
Not a regular real estate loan. You might have to get a personal loan or something like that to do that, but not a real estate loan, because I think if they have there's not truly a guideline for it. So, minimum square footage, but there technically is. Hey, before I forget, back to the insurance. So with all the exodus we've had, it's led to an increase in enrollment in California Fair Plan. The state insurer of last resort, right, saw 272,846 homes enrolled in 2022. They don't have the full numbers for 23 yet. I guarantee it's that plus even more, because more and more people with more insurers leaving, you have to go to the Fair Plan, and that's not cheap. So
yeah, well, that's and that's what I'm saying. I mean, especially you mentioned earlier that it's like Allstate and like State Farm. I know so many people, that use those, and they're just leaving for home insurance, right? Like they're still offering like car insurance and stuff.
Not all of them.
Oh, okay, so
some of them aren't even doing their car insurance.
Yeah.
So I mean, so Safeco was one of them that's not rewriting policies. We had to do something with our car insurance, make some changes, and They're like, sorry, we don't write them. You'll have to go elsewhere. So I went to USAA, and it saved me $1,500. So I was like, okay, thanks for making me leave.
Right.
Yeah.
I have Safeco. That's interesting.
Yeah.
Yeah.
Well,
I didn't even know
USAA, so that's okay.
Well, that's like, yeah, that's I don't know. I wonder, because granted, I mean, it all gets rolled into like the mortgage payment and everything for a lot of people. Like, I wonder how that's also going to mess with affordability for quite a few people.
Well, it does up there. I mean, it's like having a homeowner association.
Yeah.
So for average insurance, I used to put $250 on the application for some, Tuolumne County and Calaveras County, just to start. Well, it might need to be 300 now. And think about that. What's the average HOA in our town? 3 to 350. And the question is, well, why are you buying that place with an HOA? Why don't you look to see how big of a single family home you can get for the difference in the payment, which is probably only 70,000 difference in the value, right? But that could be a totally different neighborhood, right? So it just depends on what you're looking at. So it's just one more thing to make it harder to buy.
Yeah.
Yeah.
It's like, and that's where, we've been saying it, right? Like, don't wait, go when you can, because as more of these things start going into effect, everything, and it's crazy because it's like a snowball effect, and it's silent too, right? Like, not a lot of people know, or there's still a lot of people that have the stance of like prices are going to come down, and I don't know. I don't see it. I don't see
prices aren't coming down.
Yeah.
Here's why. In 2022, both younger and older baby boomers made up the largest generation of home buyers. The cohort accounted for almost 2 million properties nationwide, equaling to almost 40% of all homes purchased was for those two generations.
Yeah.
And what's happening is we got this silver tsunami where now more and more of those people are starting to wanting to sell their house and get into a smaller house. And they're competing with the younger generation because what do they want? A house they can afford. And they're fighting for the same thing. And so there's this huge silver tsunami that's coming that, there's 12,000 Americans turning 65 every day.
Yeah. No, I did an open house actually on Saturday, and majority of the people that came in were looking to downsize.
And the reason I bring this up is there's a reverse mortgage for purchase. That's not like so basically what they do is they put down 60 to 65% and keep the rest of their money. And why would you do that?
Well, you're saying to put down 65% on the next purchase,
right? So they're selling. Most of these people selling the house, they have a lot of cash,
right?
Because they've owned it for a while. So why put all the money down on a new place? A lot of them are putting. They're not. In order to downsize, it's got to make sense, right? Yeah. So if they have to get a mortgage on the new place, that is what they paid for their old, which is higher than what they paid for their old place. That's not going to work. That they have a payment that's higher, and why would they? Yes, they can under Prop 19 move their tax base over once they make the adjustments in it, right? If they bought their house 30 years ago for $150,000 and now it's worth say $700,000, and now what are they buying, a $500,000 home?
Yeah, that's the big challenge. Like, I have a lady that I've been helping for the longest time try to move from Riverbank to Oakdale, and she has this big, like 3,000 square foot home, nice 2-story with a pool, everything. And, we go to these single stories in Oakdale, and she can't, it doesn't pan out. It doesn't make sense. She's paying more no matter what.
Right. And that's what happens.
Even though she's going to be selling like 100,000 more than what she's going to be buying, she's going to be paying more.
Right. Because the tax, even if you look at the tax increase and what the 2019 allows, Prop 19, not 2000, Prop 19 allows, when you run the numbers, your taxes are going up. Yeah. It's just how much are they going up? They might only go up 200,000, but they're still going up, right? Or down. It just depends on what that is. And you have to run all those numbers. But if it's her house isn't free and clear, then right?
She owes like a little bit, very, very minimal amount.
Well, then why isn't she just doing a reverse mortgage and keeping most of their cash? A lot of people go, well, I don't own the home. You own the home. The difference is you don't have to make a mortgage for the rest of your life payment if you're over 62. Is she over 62?
No, she's like 50.
Oh,
like right at 55.
Yeah, well, then she can move. Yeah, well, that's different. You're not going to down. Yeah, just close off those rooms and just move on.
I mean, and it eventually to get to that point where it's like, I just told her, I'm like, well, if you want to move, you can, but it just doesn't make sense, right?
Mm-hmm.
And it's unfortunate because it's like it's just her in this big house, and that's where like she really wants to go to something smaller, because it's like she cleans, like she's a clean freak, like her house is super super clean, and I think that's what it is. She's like getting tired of having to like keep this big house clean all the time, but
get some sheets, throw over them the rooms that don't have anything, cover them up so the dust gets on the sheets and move on. Close off the vents, get someone to come out and affects. You know what I mean? That's because she'll be paying the same or more.
Yeah.
And most of the time it's more because she's owned it for so long. And that's why a lot of people who are buying now, getting the 1,500 to 2,000 square foot homes, are never going to leave them.
Yeah, they're going to be locked in.
They're going to shove people in the extra rooms for the 18 years they have the kids and go bye-bye.
Yeah.
And stay there. That's what we're going to see, because everybody gets a bigger house because they need it, and then they downsize. Well, right now with the rates and everything else, it doesn't really pencil right. But if your house is paid off and you're over, say, 65, like other people are, you could put down, like I say, 60. So if it's say it's a $500,000 house, you put down $300,000 and you don't have to make a payment for the rest of your life.
Yeah.
Just taxes, insurance. That means you get to save all that other money and put into your savings and money markets, other places to increase so you can live off that money. Because most people don't realize when you retire, $1 million lasts maybe in California 14 years if you're lucky.
Yeah, no, you need way more.
You're gonna outlive the money you have. That's why doing this makes more sense for people. And even if you sell out of California and go somewhere in another state and buy a cheaper house and everything else, do the reverse mortgage. So all you have to worry about is tax and insurance.
Yeah, I think it'd be interesting for next week if we can kind of prepare something like and give an example of how it would look, that way, because I'm even more interested. I'm not grasping it 100%. So, even on mine, it'd be nice.
So instead of making the payment, it just gets added to the principal, and the principal grows over time. And people go, well, what happens when I pass away? Can I leave it to my heirs? Yes. Well, we're in that position of time where we don't have enough homes. So for the next 20 plus years, houses are going to appreciate
a lot.
Yeah. Right. They're not going to go down. So you're going to outpace what you're adding onto your loan. Yeah. So when you're done, your kids are still going to get something, and they don't have to pay your way.
Yeah. No, that's good.
Yeah. It's a great program. Since it came out in 2009, last year, there's only like 2,000 of them done in the whole United States, because people don't understand it. That's a horrible program. No, it's not. They're great.
Yeah. A lot of people,
if it's done right.
Right. I think there is a huge negative connotation to
because they're thinking the older program, and the reason not. What happened before was you didn't have to qualify for it. Before it was, all right, go ahead, and it didn't matter if you made any money or not. But then people got behind on their taxes, and then there was foreclosures on the properties because of the taxes. Now they make sure that you can afford the taxes and insurance so that you don't run into that issue.
Yeah. No, yeah, that's it. Yeah, that's I think it is a great plan, especially for people in that situation. And we're seeing a lot of it right now.
Well, it doesn't work for everybody, but it's going to work for 20% of the population.
Yeah.
That is in that age bracket who are thinking about it. Yes, I can pay off my house with all my money, and then I only have taxes and insurance, but then I don't have that money from the house I sold. Anyway. All right. I think we're good. I think we beat a few things today.
No, that's great.
All right. Thanks for being here again. Thank you for being here. Thank you, Francisco, for coming in today. Really appreciate it. And I'm going to say, make it a great day. And you say goodbye.
Goodbye, everybody. Make it a great day. And feel free to reach out 209-493-2400.
Or reach us through Facebook, direct message us anywhere. I'm Ed Parco everywhere. All right. Make it a great day. Thank you. Talk to you next week.